Joining me now to discuss currency projections and the Forex market is Paul Robson, Senior FX Strategist at RBS. Hi Paul, first up, the Norges Bank will hold its monetary policy meeting on Thursday. After a surprise rate cut in March, market players are expecting the bank to keep rates on hold. What are your expectations for the next meeting?
Yeah, we also think that Norges Bank will keep policy on hold. The last meeting, they were faced with quite a sharply stronger exchange rate, and I think that they feared a knock-on impact onto inflation and additional parts of the economy that would be suffering under a strong exchange rate. They come into this meeting with inflation broadly as they expected, and the currency relatively flat also. So while the strength of the currency from a medium perspective might be a bit of an issue, I don't think there would be in any rush to cut interest rates at this point.
Do you think Norges Bank has come to terms with NOK strength then? And in that case, when do you expect cuts to be reversed into hikes? When do you forecast the timing of the first rate hike by the central bank?
Well, I think that will be largely driven by what happens abroad, and the trouble with Norway is that rates are not going up outside of Norway. In fact, they're coming down, and that's pushing Euro-Norway lower. So they'll be very conscious that if they started tightening policy too early, the currency would appreciate. So unless interest rates start to rise abroad, I think you can expect Norges Bank to leave rates on hold for some considerable time.
So as a result of what we've just been discussing, what are your forecasts then for Euro, Norwegian krone over the next 12 months?
Well, we have Euro-Norway going a little bit lower, drifting over a 3-month period down to 750, and maybe a little bit lower than that. Obviously won't be in a straight line, because if the currency was to strengthen more dramatically than that, then interest rates would be cut, and that would send the currency a little bit higher. But continued lower through 750, gradual strength of the currency against other European currencies is our current forecast.
Last week, the New Zealand dollar US dollar cross broke lower, ending a 3-month trading range. What's in store for this pair in the short, mid and long term?
So the Kiwi dollar is trading more off the general risk appetite in the markets. Interest rate expectations have come a little bit lower. The data have been more mixed. It relies very heavily on what happens in Australia, in Asia for trade, and the fact that the RBA, for example, is cutting rates. Asian growth is slower, suggests that the Kiwi will struggle to sort of outperform, say, the dollar. So at these levels, I think we might go a little bit lower in Kiwi dollar, but we wouldn't be surprised if you get buyers at these levels for maybe long-term investors looking for exposure to Asia generally, and those currencies that are backed by commodities.
Pound strength against most major peers has been quite impressive over the last month or two. What are your reasons behind this? And if we talk specifically about the pound versus the Swiss franc, what are your 1-month, 3-month and 12-month forecasts?
I think that sterling is being relatively well supported by interest rate differentials. It's not that interest rates or market interest rates are rising for the UK, although they haven't stopped falling, but it's other currencies where interest rates remain low and continue to converge on very low UK levels. So the UK cut rates and market interest rates were low for some considerable time, and now in other countries, whether it's Sweden, Switzerland or in the Euro area, interest rates are coming down to UK levels. So on a relative basis, that is making sterling attractive. I think also for sterling is benefiting from the fact that the UK didn't promise very much in terms of fiscal austerity and is actually delivering those plans, whereas other countries have promised quite a lot and failed and missed their fiscal targets, both in the periphery of Europe but also in several important core countries in Europe. So sterling Swiss, I think, will largely mirror the moves that you have in euro sterling. At the same time, we think euro Swiss, for example, will hug 120, the floor set by the S&B. So from here, sterling Swiss might have a little bit of downside as we get a retracement in some of those gains from sterling. And also I think you can't get too optimistic about sterling performance over the months ahead, because if we get slightly tighter monetary conditions, we've got a slightly tighter fiscal outlook, and economy dealing with previous gains in the exchange rate, I think that's going to be a tall ask for the UK economy. So we think that sterling gains against other European currencies are close to exhausting.
Paul, some great comment there. Thank you very much for your opinion on the matter. Now that's all for Targets in Focus, but join me for more Forex analysis tomorrow with Wells Fargo on another edition of Targets in Focus. Goodbye for now.